Yeah.
Coincidence.
Yeah.
Coincidence.
Yeah.
Coincidence.
Something that happens by chance, I think not.
Hello and welcome back to Buy Wholesale. Today we're talking about a SPAC merger that I am super excited about. Social Capital Sophia V. But let's just go by the ticker symbol IPOE for easiness, please. And we're going to get into what it does, what the merger means, why I'm excited, who's behind it, and what the goals are and where I see this potentially going. Before we get into it, please like, please subscribe, trying to grow the channel, you know the crack. Without further ado, let's get into it. Okay, so we'll bounce on Investor Palace. On Thursday, it was announced that Social Capital, head of Sophia Holdings, yet another blank check company, would take SoFi public. Okay. Before we talk about the merger, it's important to know who's bringing this merger to us. It's Chamath. He's at it again. Okay. Now, for those who don't know who Chamath is, it's worth noting that he started in AOL back in 2004, becoming the youngest vice president. So that is some accomplishment in itself. He left them just a year later, and he joined a company called Facebook. Okay. Now, Facebook, everyone knows, he was an early investor in Facebook, and look what they've become. So he's got an eye for it, guys. Okay. There's other things that he's dealt with as well, investments in Plantar, which is huge at the moment, and so on and so forth. So, look, I'm not going to talk too much about him. He started up funds. He's heavily involved in investments. Also, side note, he's a poker player, which is good, but like myself, you know, life is a gamble, and I'm all about the poker chips, guys. So he's been involved in some mergers. When we go in the investor place, you'll even see here, there's some of the other ones, Open Door, Clover Health, and then there's that Virgin Galactic. So look, he knows he's got form for being able to push these things through, so why not? Why can't he push this through? The IPOE stock came public in October 2020, okay, making it the fifth blank check company bearing the Social Capital Hezbollah name. Okay, so it raised 700 million by an offer 70 million units at $10. Okay, so it got the form up, so it got some money in, which is good. Now it's had some big rises already, up over 60%. We'll have a quick look at the graph at the end of the video. He's saying that legacy banks are failing, and I think there's proof in that. I think, you know, personally speaking, the reason I started getting in investments over the last couple of years is purely because there's absolutely no interest in putting any of your money in the banks. The interest rates are appalling, and they've even got even worse since March. I think you're getting about 0.1% in an ISA account now, which is just, you might as well just put your money underneath the mattress. Honestly, it's shocking. You know, you're not making any money there. Like, it's not surprising that people are moving away from that. Fintech startups, he believes that's why people are moving towards them, and I believe that he is correct in assuming that. He says consumers are looking for low fees, accessible service, transparent lending, and a one-stop shop for financial products. Couldn't agree more. Don't know about it yourselves, but if you've ever taken finance out or you're looking for credit cards, it could be a pain in the arse keeping on top of things when you've got several different lenders or whatever it may be. It would be great just to have one-stop shop for all your financial products. So I'm with you there, Chamath, no doubt. Okay, so SoFi is a fintech startup that deals in personal finance, whether that be your student loans, mortgages, just a general loan for perhaps for buying a high purchase like a car. It deals with investing, banking, okay? And the key thing is there are lower fees than the majority of banks. Banks are failing. People are sick of banks. Interest rates are rubbish, and that's probably why we're seeing so many people move to these types of different companies. Plus, we're also seeing people even moving into stock trading and stuff. People want to take more control of their finance and what their future is going to be. And if we go onto the website here, you'll have a look. Okay, so this is the website here. Nice, attractive money incentives for moving across. As you can see here, different types of things that they do: money, investing, the credit cards, student loan financing, private loans, home loans, so on and so forth. Even touching on insurances, which is actually underwritten by Lemonade. And Lemonade has had some rise recently as well. So the IPOE presidents and directors know exactly what it's all about, and they're keen, and they've been at the forefront of a lot of big mergers this year and rises in those stocks. So you know, this is a nice wee website. It's user friendly. You can see they've got nearly 5-star ratings, plenty of members, growing, 98% customer rating. You know, these are the kind of things you want to see in a startup. Everybody that's involved in it right now are loving it. They have a lot of different types of ways to invest. You know, you've got your ETF, stock based, crypto, retirement accounts. You know, that's massive, and that's the way we're going. I really feel that this is something that could definitely take off. I'd advise everybody to go on, have a look at the website, and you can get a good review of everything that they're doing. But if you even just click onto the About section, you can get an idea of how it works, investors, your information for us, their values, their leadership, see who's all behind it. But they're not a bank in a good way, okay? So what they're pretty much saying is, we'll offer you everything at bank, but we're doing it in our own way, in our own terms. Okay, so look, there's a bit of an overview. Please go in, do your due diligence. I'm not a financial advisor. I'm not telling you to buy this. Don't come to me saying when should you buy, when should you sell. I'm going to just give you advice. It's up to you to do your own due diligence. It's up to you to make your own decisions. But for me, I'm investing in this one. I think it's got legs on it for sure. I'm excited about it. I like who's dealing with the merger. I like that he's got success at doing it, so I'm confident that the merger will go through. I like the product, all the different services that they have, and personally speaking, I like the idea of having one app that can deal with everything, one login. I don't know about yourselves, but for me, I mean, I've several different bank accounts, and the way that's all made up, wouldn't it be great just to have one place to go and review everything, have an app on your phone that deals and has all those statements and stuff all tied in, and that's the idea behind this. So it's exciting. I see the need for the product. Reducing fees, banks are dying. I do believe that this is something great. So have a look at the graphs here. You can see it's currently trading at $18.47 as of sort of a quarter to the 8 UK time on the 12th of January. I bought in yesterday. I've done my usual approach. I put in sort of about 30% of how much I would like in yesterday. I've upped it by another 20% and buying the dips today, and depending on tomorrow I'll increase again. I like to sort of, as I previously said, I like to average in into a share. Sometimes you lose out on the big rises, but more times than not I find that it gives you a nice cost base and you can ease yourself in, and I try to buy the dips over a week. And that's just the way that I like to do things, guys. So it gives me a comfort blanket. There's nothing worse than throwing your full capital into a stock and then watch it go down for 3 days. It just eats me alive and annoys me too much. So I like to put in a mistake. I would rather miss a bit of a rise than go balls deep and then take a gape.
I've got nothing left. I've got nothing left.
I actually got asked the other day, why don't I show in the charts how much I'm actually making on these things. I show the result, and that ultimately keeps us all on the same level playing field. We're all up in the same way. So I'm going, well look, there's two times leverage Tesla. I'm very bullish in Tesla. I'm up over 125%. It's actually just came down the last couple of days, but I'm up 125%, and that's only on the recent purchase of Tesla. I bought in and sold Tesla. As you kind of know, I'm a bit of a swing trader. I will sell Tesla leading up to earnings and try and buy the dips. I've got a strategy plan there, and we'll talk about that as it comes. I don't see the point in showing people how much I'm up because it puts pressure on people, and there's some people that I don't want this to become like a gamble. And if you're joining my channel, it's about growing together and getting the percentages up. If you can return a stock of 50%, 100%, a home run, you should be applauded. It's about being together, learning the stock game, trying to improve and develop skills, and that's what this channel is all about. So as you can see, I've opened my position slightly down on it, but I've only opened it up. It's not big bears, about a couple of percent. Not concerned at all. I'm not buying this to try and get a few percent. I'm buying this because I believe I could double my money on it, kind of thing. So yes, average in. Tomorrow if it goes down a bit more, I'll just buy the over 50%, so my average price will come down. So that's the video, guys. I hope you enjoyed it. I hope you have found it informative. If you have liked it, please hit subscribe. Please like the video. Trying to grow this bitch. You know what it's about. And until the next time, enjoy. Peace.
Coincidence. Something that happens by chance, I think not.